Hey, welcome to the Bitcoin Matrix. I'm your host, Cedric Youngelman. This episode is a recording of an X Space I had the pleasure of hosting on March 24th. It features a compelling debate between Brent Cook, a veteran NVIDIA analyst and probability trader, and Grain of Salt, a successful Silicon Valley investor who went all in on Bitcoin back in 2017. Serving as our impartial juror is Joe Carlasare, a seasoned commercial litigator and respected voice in the Bitcoin legal space. At the heart of our discussion is one of the most fascinating moments in recent market history. Josh Mandell's precise and publicly stated prediction that Bitcoin would hit $84,000 on Pi Day, March 14th at precisely 8 p.m. Eastern Time. And remarkably, it did. Kevin argues that many are being fooled by randomness. Grain believes Josh is simply an elite trader and maybe even tapped into something unconventional. Memories, multiverses, time loops, who knows? But what if he's right again? This time about Bitcoin hitting 444,000 in November of this year. At the very least, he deserves our attention. Maybe not everything we see is all there is. If you're into trading, probability, human potential, or the mysterious space between science and the unknown, this episode is for you. The world's largest Bitcoin conference hits Las Vegas May 27th to May 29th at the Venetian Resort. Use code MATRIX for a discount on your tickets at b.t/conference/2025. Or grab a link in the show notes. Join me for an ice cold beer in Vegas. Get your tickets now. I hope you enjoy this rip. If you want to smash by this dip, use my code MATRIX over at river.com and earn up to $100 when you buy Bitcoin on River. If you do want to get in touch with me, it's Cedric at thebitcoinmatrix.com. And now, let's enter the Bitcoin Matrix for this fascinating discussion between Grain of Salt and Brent Cook.
What is real? How do you define real?
You can't jump into cash. Cash is trash. What do? You get out.
I'm super excited for the chat. This will be, more of a discussion, but we have agreed to sort of a structure here where we'll give Kevin and Grain a few minutes each to introduce themselves and begin with 5 to 10 minutes each for some constructive speech and to make their case. I think everyone's kind of agreed to that beforehand. Maybe I can get a thumbs up from Grain and Kevin.
Yeah, that's great. And Cedric, now you have the echo now. So
I do. Okay, I'll work on that after I pass it over to you. Let me do that. So Kevin, why don't you take 5 to 10 minutes to maybe give us your story, your backstory, and who you are?
Fantastic. Thank you. All right. This should be fun. All right. So let me tell a little bit of my story and why I'm here. I've been an NVIDIA analyst since 2017. I wasn't paid for that at my investment research firm. I just slowly created it on my own on top of my other duties. Once I learned what a massively parallel architecture was, I was hooked. It broke down the mystery of a supercomputer in a way that I could grasp. So ever since, I've been encouraging teenagers and other big kids to put down the video controller a few hours a week anyway, and learn about GPUs and machine learning. Now, as an investor in picking stocks for other people for the past 15 years, I've made my share of mistakes. But one thing I did right was learn what NVIDIA could do with GPUs and then always explain why you should buy the dips. In 2017, I made my first videos and podcasts about massively parallel architectures, deep learning, AlphaGo, deep stack, and neural networks. And there should be, or I can post in the nest, one of my pieces from 2018 titled, "Who Cares? NVIDIA Makes Great Gaming Graphics." And there was a point there where we should have all paid attention in 2017, 2018. So that year, I also submitted a pitch to the National Science Foundation Fund for an AI-powered concept for youth STEM education. I called it the Learning Design Engine. I was inspired to do this because I grew up allergic to algebra and didn't teach myself probability and statistics until I was in my 30s. And I did it primarily with stories. So, that inspired me to learn the math, like going back to Pascal and Fermat. My concept was to use an interface that would let teens and their teachers enter curiosity prompts based on their interests and aptitude, and then the engine could create personalized immersive experiences in any STEM area using AR and VR. This was before the Transformer paper in the summer of 2017. And some have said I was channeling ChatGPT before any of us knew what an LLM was. Unfortunately, I didn't get the grant from the National Science Foundation. And you may have seen the national news lately about an AI tutor rocketing student test scores at a private school to the top 2% in the country. I think it's called Alpha. Amazing stuff. So I was early and I was naive. I listened to people who told me that I didn't know what I was doing because I wasn't a technical person. To be clear, though, I'm not an expert. I'm not an engineer. I'm not a computer scientist. I'm just super curious. And when I tackle an area, I try to quickly get to first principles, especially the origin stories, because I like stories better than equations. And it's really about doing the work, just like many of you have done in Bitcoin and MicroStrategy. But our interests may have diverged a little this past week as you were talking about Bitcoin or MicroStrategy or in Saylor's latest presentation. I was knee deep in NVIDIA GTC for 3 sessions a day, learning all I could about that juggernaut. All right, so what inspired me to go to ground truth and first principles of probability? When I first walked into the trading pit, the CME in 1994, I was hooked. Here, an average Joe or Jane could lease a badge and trade global 3D chess in pork bellies, Deutschmarks, gold, and Eurodollar rate deposits. And I was walking among some of the market wizards, still on the trading floor in the offices that Jack Schwager wrote about in his books. I devoured those books. And when I read his books, I distilled 6 common themes that I called the keys to the kingdom: psychology, risk management, systems, consistency, discipline, and probability. There was just one problem. I was the math flunky. But the wizard said probability thinking and system was non-negotiable to be a successful trader for the long term. And it was, in fact, the antidote to irrational emotional trading. But I was just a lowly clerk making $6 an hour. But because I was tenacious, I learned fast in several areas simultaneously: math, options, currencies, forward rate curves, hedging, contango rolls. Within a year, I was teaching introductory courses at the CME that I designed for new hires on futures ops and global hedging of interest rates. Now, who knew that I could understand synthetic loans that could be created from forward Eurodollar contracts? I named the amphitheater that was the Eurodollar pit the Swiss watch of finance because of its precision fine-tuning of corporate paper, bank lending, and yield curve spreading going out 10 years. Then I got 2 breaks, one little break and one giant one. In 1998, as I watched more floor traders move out of the pits to the electronic trading desks, and no millionaire CME gold badges were putting their arms around me like they did with their cousins and their nephews, I decided to look off floor. I took a job as another type of clerk in the back office of a currency arbitrage shop. I was basically a glorified bookkeeper, creating and tracking payments of 2 billion worth of British pounds or Japanese yen every night. But I was doing it at 3 a.m., and it was brutal. After the first week, I wanted to jump out the window into the Chicago River. But I had a young family at home and our first house. So I crushed it for a year, and then the chief dealer offered me a position on the trading desk. I had finally made it. That's when my learning really took off. The new euro currency had just launched in 1999, and volatility picked up on all the fear and loathing around that. Would China dump dollars and treasuries to buy oil and euros? All that stuff. It was a cage match training. I survived multiple face rippings as the ECB, the European Central Bank, would intervene to support the euro from 85 cents back up to 95 cents. Within a year, I was transacting 100 million per night doing spot futures arbitrage. Yeah, we still had to work the midnight shift because CME FX futures weren't allowed in the day. But my most important lessons were still about the basics: probability and my own mind and emotions. I studied Danny Kahneman's experiments in behavioral finance and Antonio Cio's experiments in the neuroscience of decisions involving risk and uncertainty. Even before I read Nassim Taleb's Fooled by Randomness, I was working on research about rogue traders and how what the rogue does to $1 billion of other people's money, we can do to our own accounts if we're not aware of our biases. So I have an article I can put in the nest titled Mental Models of Financial Sabotage. It's on Medium. And it's about how traders fool themselves with numerous perceptual and behavioral biases. I concluded that if you didn't get your probability basics right and know your behavioral biases that interfere with rational of systems and rules, then you were never going to make it as a trader. Around 2004, I devised a probability training to solve this problem for professional traders who were coming off the floor, many of whom had been lucky on the trading floor in the pits with their access to information and public order flow. I called the training the Scylla and Charybdis because it used a simulation that would root out whether traders were operating with a mental system that capitalized on randomness or they were gamblers in search of ruin. If you know the Homer's myth, the adventure of Odysseus, you can figure out why I named it the Scylla and Charybdis. My tagline for the simulation was risk software for your brain. There's a tech guy, a VC guy I follow on X named Greg Eisenberg. He's a good follow. The other day he wrote, every industry will be rebuilt around multimodal AI, not because of cost savings, but because humans suck at integrating information across modalities. AI can see patterns across text, images, voice, and data that we physically cannot. This is something I believe for decades, but have trouble explaining to most people because they have a lot of trouble in it. The first step in lots of endeavors is admitting that you suck. The best learning and drive come after that. Every successful trader, entrepreneur, business manager, athlete, or musician knows the first step is admitting you suck. I went out of my way in the 2010s to make sure I knew where I sucked and to fix that with Black-Scholes options pricing, volatility arb, VIX derivatives, and put call parity. I often say that if you haven't taken the time to study Black-Scholes, you shouldn't be talking about anything in markets and trading. It's like commenting about your education system or NASA without understanding what Archimedes, Galileo, Kepler, Newton, and Einstein actually accomplished. I'm not saying you have to pass a calculus class. I'm saying if you study enough probability and statistics and grasp the primary functions of Black-Scholes, especially second derivative curvature, then you will be a reasonably educated and intellectually flexible skeptic in markets and in life. For example, there's an epidemic on X of traders posting about gamma squeezes, and they don't even know what second derivative curvature is from Black-Scholes. Even more basic, most don't know what put call parity is and how it logically precedes Black-Scholes. I tried to fix that by offering my 2008 article for free, but very few MicroStrategy traders are interested. I can put that in the nest too. I always offer it free. If you've spent more, and this is what I say, speaking of Italians like Galileo, if you spent more time watching The Sopranos than reading Galileo, my options physics might be for you. Lastly, on the education front, I'm currently writing a book called Deep Time and the UFO Paradox. Science education is my most important mission, especially for teenagers. And I would like to spend all my time focused on this because pseudoscience is the worst thing we can give our teens. You can also get a free copy of the first 5 chapters of my book, Deep Time. And I pick on the UFO crowd because they are easily the worst and most prolific offenders. And since I've been studying evolution, astrophysics, and neuroscience, as a hobby, in my free time, I'm not just a skeptic of UFO narrative. I actually do the work. This said, I'm not here to criticize anyone today. I'm just here to have a conversation about science and probability and math, and hopefully I can elucidate some key concepts that can help us all. As Rick and Grain, this really has nothing to do with Josh as a great trader and person, and I hear he's great at both. I am also completely open to having my mind changed, or at least learn something new at any point during or after the discussion. And finally, I would hope this would be a civil, highly educational debate and no one in the audience walks away angry or ready to dox anyone else. If my words offend anyone, that's not my intent. Just be willing to look at that as that where that reaction and where it leads you. And you are also free to make fun of me for not fully getting Bitcoin until March of 2024. That's right. I'm barely a yearling in Bitcoin, and it took Saylor to do it. And my video that I made in September about this, called Bitcoin for Family Offices, has nearly 3,000 views. So if you've watched it, I thank you. I find it still educational, no matter what your level of investing. So thank you.
Yes, thank you, Kevin. I hope echo is gone. I hope I corrected that problem. Thank you for sharing that. I think it's good to hear your background and your approach. I think there's also an opportunity now to give Grain a chance to share a little bit about his background or what he's familiar with before we get started. And I'll outline a little bit more about how we'll arrange the conversation after Grain's introduction.
That's great. Thank you. So for the people that have heard of me before, grain of salt, I do get questions on why did I pick that name? And that's because I approach things with a degree of skepticism. So if I'm skeptical about something, then I put the work and effort into to figure out why this should be something that I do or why I put my money in it. So I've said before in spaces, I got into a lively discussion of a guy that reported to me who was an MIT graduate, was not Michael Saylor. And in December of 2014, but I didn't buy any Bitcoin because you had to buy it on Mt. Gox in Japan, and the price had crashed. So it was in about $240 at the time. So I didn't buy any, and it was very immature at that time in terms of the wallets, holding it on exchanges, and so forth. So I didn't buy any. I've also said, and everything that I'm saying on this, I've said in previous spaces. So I went all in 2017 because Brian Kelly goes on CNBC and says, as everybody knows. And as soon as somebody says, as everybody knows, you don't know what they're going to say next. So Brian Kelly says, as everybody knows, on I believe May 17, 2017, Bitcoin hit its all-time high a week ago of $2,000, and it was trading at 1930. And I'm like, oh my God, I missed the run. So I said this before. I was a successful Silicon Valley guy, and I went all in 100%. Then, and I knew that in the future, and I had done lots of research preview to this, and I knew that if this was right, then in the future I'd look back and be, why didn't I go all in? I do have a degree in economics. I've said this before. I'm approximately 57 years old, and I'm a tech guy, so I understand that these inflection points happen. So I went all in, and Grayscale Bitcoin Trust was an imperfect product. That product ran up. I basically made a 12x on the money I put in. I had said in previous spaces, I put in $1.7 million. It shot way up. I should have cashed out more, but I didn't. Everything was fine. Then we had the second run up. I talked about that. I cashed out even more in the second run. So I've now been through 2 crypto winters. And then in January of 2023, I'm like, well, this Bitcoin thing is not having a volatility for me. So I have to switch to MSTR. It's just because I'd been in it for a while. And so this may will be 8 years. So I just said, wow, I got to go into it. Then everything changed in August of last year. I got a blue check mark. I started being much more aggressive in my posts. I started posting my portfolio, which I'm not doing anymore. And everything went bananas, obviously, in fourth quarter on MicroStrategy. It shot way up. I went to Bitcoin First, Fred Kruger's event, which I think is one of the best events in my whole career that I ever went to, even in tech, not even close to tech. And the reason why, because people had hope. They went there knowing that they knew about Bitcoin, and you had to pay to go there, but you could only be invited. And there was no PowerPoint presentations, and everybody was able to have these discussions. So we went there, and I met a bunch of people. I met a very controversial Italian power law guy. I spoke to him directly. I spoke to Fred directly. I spoke to other people there that I met, and it was an amazing event. Ryan was there. Punter Jeff was there. We talked about MSTR options. Dan Hillary was there. So it was a great event. So that continued. So with that said, where we are today. So I think MSTR changed everything because of a couple things. I believe that MSTR is securitizing Bitcoin as a Bitcoin treasury asset, and they're doing that through a publicly traded company. Everybody should understand that. So then what's happened, where are we today? I went to Bitcoin Investor Week a couple weeks ago, and after the price on both Bitcoin, after it hit the all-time high in fourth quarter, it crashed down. I have famously said about how much money I have lost, but I didn't say what the net gain was. My net gain was really large. So even though I lost $40 million, I'm still excited to get on these calls. And I think that that's a warning to everybody, is that you can be in this for 8 years and you could think you get it. And in 3 days, you could lose 50% of your money in options. So nobody should copy trade me. I posted where I think it's going today. I have different views. I work with Dan Hillary. This is a known thing. There's an option optimizers that we built based upon how I want to see it work. And some people have accused me that I don't understand first and second order Greeks, and they're entitled to their opinion. Free speech. So where do I think we are right now? This is that I want to talk about, and then I'll mention Josh for a second. I have mentioned that I have spoken to Josh over the past year. He calls me every once in a while. I call him. I did speak to him before the prediction happened on Monday of that week, and then I did speak to him after that. With that, what I could say is that's why I took the position here, is that we're not being fooled by randomness, that this was a specific event. It was not random. It was predicted and unique. So Kevin has his side, I have my side. And I think a couple of things I will say is that I do not believe in the efficient market hypothesis. Based upon the people that I have contact with in New York, Bitcoin Investor Week, Digital Asset Summit that just happened, if the market was efficient, if the information was well known, there would never be a short squeeze or a long liquidation, because all the smart people, all the hedge funds would already know this. And since those events do happen, and in some cases maybe a gamma squeeze happens where the market maker has to cover versus the investor, I think that the markets are not efficient. And one of the things that I do is I try and arbitrage that difference between where the market prices something and where it's actually priced. And some of that could be, it could be a pseudoscience, but I have to look at the numbers. And that's where on this call, you're going to have me as a skeptic saying,
Podcast, we release a philosophical conversation about Bitcoin every Sunday. I do have a little background with Josh. I hosted a spaces with him back in January. And then I for myself, I thought the biggest thing for me was the shared experience that I think we all went through watching Josh's call. So before we get into the constructive dialogue here, I want to give Joe a chance to introduce himself, and he's been invited as our impartial juror, or as impartial as Joe can be. Maybe Joe can kind of talk a little bit about who he is and how he's going to approach.
Thank you for having me on. So it's Joe Carlasare. I'm a commercial litigator at the Chicago-based law firm Amundsen Davis. We have a national cryptocurrency and Bitcoin practice group. I've also served, which kind of makes me well suited for the purpose of this discussion, as an arbitrator in private claims previously. I don't do that very often, but I've done it a few times in the past. Really, from my perspective, I just want to hear the arguments, the persuasiveness. We can, abandon any ad hominems or any personal attacks. Let's just stick on the greater weight of the evidence and see who makes the better case. So thanks for having me on.
Awesome. So let's get into it. Just a few things. Again, Kevin doesn't know Josh, and this is not about his greatness as a trader nor his character as a person. Obviously, we've all heard great things about Josh in those categories. Also, we don't know Josh's model, neither does Kevin. So, that's not really part of the discussion. And the structure is going to be a typical debate structure where each side presents their argument for about 10 minutes. And then we can have rebuttals, any cross-examination for about 5 minutes each. And then Joe will have an opportunity to jump in or either have questions at the end, and then we'll see if we have time for a Q&A. So with that, I'm going to turn it over to Kevin for about 8 to 10 minutes, if needed.
Awesome. Thank you. Like a couple of weeks ago, probably after it happened. So the first question any intelligent person should ask is,
hey, Bitcoiners, get your sats off your exchange now. This is not a drill. Thea is the world's simplest Bitcoin self-custody solution. With their module multi-sig vault, you decide how to hold your keys. Thea is working day in and day out to bring you the most intuitive Bitcoin self-custody solution, regardless of how much you own or what your storage goals are. And they support your favorite hardware. Download Thea now for hassle-free Bitcoin self-custody at thea.us/Cedric. That's thea.us/CEDRIC.
The first question any intelligent person should ask is, what was remarkable about the prophecy that Bitcoin would close at 84,000 on March 14th? Clearly, it was that a veteran trader predicted it over 4 months prior. Seems remarkable, even magical. And you could tell a lot of folks in the BTC MSTR communities believed mystical things about the prophecy, judging from the posts and likes and comments on X that weekend. Magic was definitely in the air. I'm here to tell you that most observers are being fooled by randomness. And this has nothing to do with the sin eventually, and the ones that win get the most attention. We could judge a prediction by asking, what was meaningful and how many people benefited? We can also judge it by asking, how much did misrandomness play a role? Miss as in, or misses, if you will. And could it be repeated? And with what frequency and error rate? The prophecy was clearly not remarkable on election day, with price around 70,000. Given the trader's reputation, I don't think it was a shot in the dark, but most of us, myself included, have not seen the trader's prediction model, nor any of his pattern or cycle work that might intrigue us even more. So we can't talk about any of that today. I'm here to talk about our reactions to famous predictions. So look about what we do know. On October 27th, I published an article, not a poem, titled Scaling Laws 101. It's beyond exponential and Bitcoin will benefit. At the time, Bitcoin was trading 67K. In that piece, I described the huge breakout that was imminent for Bitcoin based on my technical and fundamental work. I listed 10 fundamental drivers and then a final technical one that sealed the deal. Here are 2 sentences from that article that I published on LinkedIn. I'll add one more behavioral trigger, the 7-month consolidation between 70K and 50K. I think the surge will happen quickly in a matter of weeks to 85K and then another month to 100K. Again, these 2 sentences were from my October 27th prediction piece, which seemed like what any good technical trader might have been watching. And the fundamental drivers are worth reading too. And I can put that piece in the nest. We can pick any day among the 100 days and analyze subsequent possible price paths. But I'll pick a few events in particular that stand out. First, few of us knew for sure who would win the presidential election. I thought it did matter. Others will say it mattered a lot. In any case, my call for a swift move to 85K came in 6 days after the election. And it didn't seem like a stunning prediction. It was just, but it was a moneymaker for those that followed me. And then it was only another 11 days to hit 100K. Again, I wasn't surprised at all. I just went to the bank. I was using BITX calls, and price gyrated to and fro around 100K during December, including a new all-time high of 108,960. I started to get a little concerned about my bigger call for 125,000 in Q1. Why? Because we were knocking on the door of 9092 a few too many times. Now, what should be noted here is that the 84K prophecy didn't say anything about a giant post-election CME gap, nor did it say anything about what highs would tumultuous events. The prediction didn't have to suffer ridicule or losses. In fact, it was helped by these unpredicted events because these were dynamic market reaction events that could have heavily influenced subsequent probability branches and paths. We can also throw in the support cluster between 87 and 92K that was making Bitcoin bounce in December. So here I am, a Bayesian probability trader dealing with these dynamics in real time, and I was not alone. Thousands of other traders and many institutions in Wales who really moved the market were also involved in a gigantic dynamic feedback loop with millions of economic events in December. Those events included the speculation and chaos of Trump moves toward and away from an SBR. I didn't need an SBR, but it made sense that if the US followed the plan proposed by RFK at the July Nashville shindig, it could and likely would propel other nation-state FOMO. So, but where was the sovereign cavalry, as I call them? Why weren't they pushing price higher? On December 22nd, I started posting charts about the trapdoor at 90.92 that had now been knocked down 3 more times, and that when broken would bring 85K pretty fast. Most in BTC SBR land, but if 85K could hold, my 125K prediction still looked good. Then December 30 made a total of 5 knocks on the trapdoor. As the events of early January unfolded, we ended up with more bounces off of 90.92. Another failed rally bounced up to 102K, and another trip sent BTC scurrying back to 91K, followed by a tag of 89K January 13th, which reacted with a 2-week surge to new highs above 109. Plenty of volatility and whiplash to activate and reactivate trend models going both ways. And Monday, February 3rd, brought the 8th visit to 99. Thank you.
Thank you, Kevin. Now, Grain will be afforded 8 to 10 minutes to speak. And, we'll see as much time really need Grain.
Yeah, I don't think I'll need. I got 536 here, so let's see if I can keep it in shorter time frame. So I'll concede all the points that Kevin made, and then I'll just tell you my differences based upon what he said. So books, there's lots of books written, and as I said before, my degree's in economics. I think that most books on economics, given the time frame that it takes to publish a book now, unless it's self-published and done, most of the time they're basically obsolete since they've been out. So everything has changed so quickly, specifically after 1971. Nixon shock, 1987, free floating currencies, sovereign nations able to go bankrupt. You have Russia that did that. So if you look at all these things that have happened, the age of turbulence sorry, it escapes my memory for a second right there. What happened here is that things have changed faster than we can expect. The human brain was not set up for this. So what we now have is that we have these communities that gravitate around areas of interest. And it could be what's cars, it could be about what people are wearing to the Oscars, all about that. So things have changed with social media. And so what happens is that you try and apply these different social constructs that these great thinkers that Kevin had mentioned had thought about. And what happens is that do those hold, are they still relevant in a post-2020 year with COVID, where you don't have to go back to your office, or maybe you do have to go back to office now? And so everything changed. It forced people to change how they work and live. And so now people look for online communities where they could fit into. And once they do that, they become rabid followers. And then they see these things that happen. And then the markets move. So what's remarkable? There was a prediction. The prediction came true. The facts have not changed on that. really the reality for this is, did Josh make 100 predictions and one came true? No, pretty much he made one prediction and one prediction came true. Mathematically, that doesn't make any sense, right? Guy makes one prediction and that one comes true. Now, he could have made 1,000 predictions at walking around his house. We just don't know things are backflips in a row. Wow, I can't do any. I don't even want to try it. But there are people that are just that good. So my takeaway is the constructs are, if somebody does something that you don't think is possible, it's your comfort level that you're seeing. And if you read 10 books on it, you dig your heels and say, that's not possible. But we all saw it. So I believe my eyes, I believe science, I believe what we can measure. And once you do that, you're like, this is the so-called evidence. Do you want to take beliefs in a book that were written before the last 5 years saying this is the way markets work? No, they're telling you about math. What I think is, I think the math might still be the same, but the inputs are different. The algorithm's the same, but the inputs are different. And that's where we see this massive technological improvements that happen. Talked about this all the time. So what I'm going to end with here is that I believe that there are many remarkable people in the world. And there are people that have talked to me in person, and I make decisions very quickly with a lot of money. And for me, I don't know how to say it, but a lot of decisions that I make with a lot of money or high percentages of my net worth are very easy for me. In fact, I don't even think about it. I just go, oh, like 2017, crap. If I think that Bitcoin is the best asset, why wouldn't I want to own as much of it as possible? If I truly believe that. If you don't believe it, then why would you buy it? But because I knew about it already for almost 3 years before I bought it, this is like the shift from normal humans all of a sudden to synthesized medications or bodybuilders. The world changed when things became synthetic, and Bitcoin is synthetic money. And so where we stand today is I don't put as I put my view in the science and the price. I think the price is absolute. You can always look at the price. How it got to that price, in many cases you don't know. So I look more at lagging indicators forward. What I think with Josh is that because he's so good at option trading, he's like, he was built for this cycle. The previous cycle, there was no options on GBTC. There was no options on Bitcoin. There's on it because Josh has been doing this for so long, for 35 intrinsically. Josh can calculate this because everybody's been on a call with him. He is so fast with the calculations. You're like,
was in at 8 p.m. UTC on the dot. I thought that was a really amazing. I mean, just it seemed prophetic. It seemed like the Mandela effect. It seemed like maybe we all willed it there. And while this was happening, you know, I do think that Kevin brought up a good point about the CMA gap fills. Those tend to just always seem to fill. Like I think 98 out of 100 have filled. You know, maybe big players are able to push Bitcoin price discovery through the options market. I mean, I think we can kind of get out a little bit. But while this was all happening, I mean, Josh did like trade the whole time and what seemed like against market sentiment. And it seemed like, and I got a lot of this from just speaking with Grain, though, is that it seems like Josh, you know, basically learned how to trade against humans and then against the algorithm. And it seems like Josh can read the algorithm or distinguish between what trades are real and kind of maybe wants in some probabilistic fashion and maybe guess his way there. So I still think there's a lot here maybe to unpack. And while this was happening, Josh was laying breadcrumbs around memories, multiverses, timelines, things that happened 30 years ago. So I think that all brings in a discussion of like, what is random? But with that, I'll turn it over to Joe for any commentary here before I turn it back to Kevin for 5 minutes.
Yeah, and I have a lot of specific questions of the speakers, and I'll save those for, I guess, the real interesting thing is exactly what you said there at the end. You know, there's a difference between what Grain was alluding to, which he used the analogy of an athlete, right? Someone who is exceptional in their craft, that is far above the average, that has honed certain abilities and can channel those towards some end, right? In a general sense. That is one thing. But being able to predict the future and being able to do so based on memories and the multiverse, and I've heard all the things, that's entirely different. And I draw a real distinction there because with one, you're talking about someone who's built up a skill set, and with the other, you're basically transcending science, which is where I think there's a huge disconnect between what I've heard Kevin and Grain's position. And I guess that my initial question, just to frame this for both of you, is, you know, if it is truly like, if we're going to wade into the non-scientific realm, that's a, to me, I don't find it to be a very fruitful discussion. If you're going to lean toward what I understand, Grain trader, and he can use his skills to make probabilistic bets in a Bayesian way based on information, that makes more sense to me. But the problem is that's not what Josh has said. Josh's position, and again, I don't want to be doing a disservice to him, but I've heard him. I talked to him privately, and his view is not what Grain is suggesting. My understanding, and again, I don't want to speak for him, but my understanding has always been that this has nothing to do with his skill. This is sort of memories. That's how he's presented it, and he's done so publicly. So I'm going to leave it there, but I do have more pointed questions as we go on.
Yeah, where I blended it, I feel like maybe his memories and experience blend with his skill set as an athletic, it's the highest, elite trader in the way that you would look at Michael Jordan as an elite basketball player. Joe, though, I will open up. Do you have a specific question for Kevin that is just for Kevin and/or Grain before Kevin starts? And I'll give you the same opportunity to ask Grain a question before he rebuts.
Well, yeah, I mean, I want to start with acting Grain, because he did bring up this idea of the athlete, and I guess. To what point are you discounting some of the comments Josh has made about this being a memory? And he said this multiple times. Said that I have a memory of this happening on this date. Because to me that is not. I can't thread the needle. I respectfully, Cedric. I don't understand. I can't reconcile those two. So maybe Grain can comment on that.
Yeah, and I'll give a direct answer. I think, as we set the ground rules here, what Josh thinks about how he did it, I think is immaterial to what happened. And so if Josh could say whatever he wants, and that's not for me to speak for him. So I think that I think the purpose of this discussion is one of the hardest things that I have to do is I took a philosophy class in college. And one of the things that is the hardest thing for me to do as an investor and as a trader, that if the positive is true, if I believe the positive is true on the same thing, and I know that there's a negative situation coming, then I have to take that also as being logically true. And that goes against my comfort. What I could say with the exceptional people that I've met in my life, and I've met just through in my career in Silicon Valley, and then just skiing. Back in the old days, I was a skier. I actually skied at Snowbird, and I actually skied with the U.S. ski team. I could not make it. I was not even close, but I was able to ski with those people, and they could just do things that I just, even though I skied 70 days that year, I could not do things that they could do. And so I have just witnessed people throughout my life that are exceptional. And then we try and make sense of what they've done. So logically, if there's exceptional people, I think that there's a small number of, just like normal distribution, most people are just regular and normal. And then you try and make sense of what those people have done. And so I take it as a logic question. I don't take it at what Josh says. Josh can say whatever he thinks, whatever he wants. That's fine. That's Josh. I can't speak for him. But for me, I'll go with logic. Wow. And that logic is he's an exceptional trader.
I'd love to hear Josh chime in at some point. Maybe I'll get to do a show with him. Kevin, out of respect for the structure of the conversation, I'll turn it to you here for rebuttal for either anything that Grain has said and/or Joe has asked or said.
Thank you, Cedric. So, I'm going to say right now, just to put a cap on this, that I don't think that Josh's prediction was random, assuming someday we'll all see his model and know how he did it. The reason that we framed that, first of all, we created a space, and you can only fit so many words in the title of a space and have it make sense. The real title of the space, from my point of view, could have been Josh's prophecy was cool, but people watching it are being fooled by randomness. I'm not saying what Josh did was random. I'm saying people watching it are being fooled by randomness. Hey, I just got a message that my mic is too hot. All right, I talk loud, and I got a Yeti here that is probably too close or something, so I apologize for that. All right, so I have that said, that really the title of the space could have been, I think everybody's being fooled by randomness, which would not have made an exciting topic for the space. I have 3 points. One, if you've been around futures or stocks, you know that gaps get filled. But I told you that I thought something so significant happened in November and the breakout from the 7-month consolidation that BTC was in a state change and we were never going to look back. Like sovereign adoption was coming. In fact, one of my pieces I wrote in September for my clients was major adoption is imminent. And I laid out the pieces of why, the whales, governments, corporations were coming for Bitcoin. Well, guess what? It didn't happen. So all of a sudden, that put the CME gap in target down to 77,000. There was weakness. Like, I was disappointed. Many of us were disappointed. Like, hey, where's the cavalry going to lift this higher? All right, so that's one. Two, the beauty of CME futures and then IBIT and then options is, if you've been involved in markets for a while, is market structure and liquidity. The more players you have, the more liquidity you have, two-way action, it creates more liquidity. So that, and so one of the elements here is that while IBIT was going off the charts, right? BlackRock is buying everything. There was also a somebody could live on the edges of that and short the futures, short the CME futures while buying IBIT. And these transactions happen all day long. They funnel liquidity for players big and small. So that was a dynamic there too, pushing things down. Oh, my last point for the 84K pin, in options, we talk about the price getting pinned on expiration day so that, let's say you're talking about the 85 calls and puts. Nobody makes money if the market makers can pin the price at 85, roughly speaking, right? Like keep the damage low. In this case, Bitcoin flirted with, filling the CME gap. And now what's it going to do? Was it being driven low? Was there volume coming in to drive it lower? No, it took a few weeks, right? It took from late Feb to March 11th to really complete the gap fill. And then what's the market going to do? It's going to drift higher. You have to consider the possibility that some big players out there and some whales who can, move Bitcoin around said, yeah, you know what? Let's go ahead and pin it at 84 and make Josh's prediction come true. Thank you.
That would be wild. I'll turn it back to Joe and/or Grain. I think, Joe, if you want to jump in with any questions for Grain before
the first question. Well, can I ask Kevin a question? Sorry.
Yeah, that's fine. Yeah. Yep.
Okay. First question. Kevin, you've invoked this a couple different times, and I want you to drill down on it a little bit more. You've talked about fooled by randomness, the Taleb book, and obviously there are many key concepts about like survivorship bias, hindsight bias, overfitting, these types of things in that. So I guess, to what do you attribute Josh's remarkable ability to get this in the markets, I guess, reaction to Josh's ability to get this remarkable prediction correct?
Well, first of all, Josh did something. I just don't know what he did, and I would love to hear about it someday. Whether it's, no matter how mystical it is, I would love to hear it because it's just fascinating. And but again, I just want people to look at like the probability paths to get us there from Note 5 to Pi Day. There were billions and billions of economic events, huge CME gap that should or should not be filled, and then, hey, where's the sovereign cavalry? How come nation states aren't just the FOMO, regardless of what Trump did? Where's the FOMO? And one thing I realize is, hey, to take Bitcoin from 50,000 to 100,000 requires X amount of capital and force. But it doesn't get any easier to double from 100,000 to 2 way they work. So, we've all seen Saylor's maps of how, hey, we can go from 1 trillion to 2 trillion and then take on gold at 16 trillion eventually. That's still a heavy lift. And then all of a sudden it sort of sunk in, I think, for a lot of big players, like, yeah, we're not going to 150,000, in before June. So
yes, but we would have. I mean, can't we agree that we again, those infinite different possibilities. If you had had a different messaging out there, if you would have had another buyer to come into the marketplace, these things are inherently unpredictable. That's my point. When you say Josh did something, and let's just reserve our skepticism for a second. If he would have done something, whatever he did, and you would have had 3 or 4 different moves on the macroeconomic chessboard go in a different direction, things change entirely. So I guess that's why it's interesting to me from your point of skepticism and the fool by randomness comment that you conclude at the outset that Josh did something, rather than just make a probabilistic guess.
Yeah. So, I think, Joe, most people on the call don't even understand survivorship bias. And so everybody needs to look at that. Oh my God, yeah, survivorship bias. I see, oh my God, it's happening all around me. It happens in my industry. It happens at work. It happens in my son's soccer game. It's it's happening all around us, and it's what we pay attention to. But had sovereign adoption come through the way I thought it would, look at RFK's plan. RFK RFK said, let's buy a million every 5 years until we get to 4 million. So we own 19%, just like our gold reserves. And Cynthia Lummis got on board with that. If they had done that, if they had announced that plan, I don't think Josh's prediction would have come true, because I think it would have created nation state FOMO.
Josh didn't seem to be responding much to geopolitics or macroeconomic talk or chatter. And one thing he seemed to intimate is he didn't want to talk too much about his process or what was happening, so that he could stay open to reading almost like new signal or new signs, to stay as best suited that he could read his own trade, do his own thing, and not so much, because he almost talked about it. The more he talks about it, it wouldn't happen, or it would cease to happen in the way that he's, the ability to read it would go away. It was kind of interesting. I'll turn it back to Grain, and then maybe we'll have time for Q&A, or we'll just wrap up. We'll see how it goes.
Yeah. So I want to let Joe respond, because I gave an answer to his question about how he did it, and I talked about logic, an exceptional person. Joe, did you have any questions for me before I chime on to what Kevin said?
Okay. So I totally believe that there are extremely astute market participants that can make forecasts months ahead of time. You see this in currencies, you see this in the bond traders, some of whom I have as clients, right? They're extremely bright and far smarter than I will ever be. But I guess the interesting thing in this dynamic, and this is where I want to go back to your sort of analogy to Michael Jordan or a great athlete, is that any one of the two of them, if you get a few drinks into them, some of the most exceptional, brightest guys that traded the board to trade, I play poker with some of them. They tell me, look, at the end of the day, we're digesting all the information. We're filtering it through models. Right now, they're using deep research and analytics and all sorts of complex tools. But they'll tell you, like, these things have confidence intervals. These things have probability rates, error rates, right? And I made one thing. I tweeted this out at the time. I said, look, there were a couple exchanges out there that didn't hit 84K on the close, right? Are we to just believe that that's good enough for government work, that we shouldn't take those into consideration, or should we say, he was directionally right? I guess my overarching question to you is, like, how do we, you had a good solid estimate for Bitcoin price, knowing that we were overbought. I mean, you look at basic technicals, RSI, these types of things. We're overbought into the end of the year. It had to correct. There were logical support levels, and there's a significant part of luck in the extraordinary, not to be discounted in any way, forecasting of Josh. So that's not to take him away, but I mean, to what? I guess, Grain, really pointed question: to what factors, what weighting do you put on luck in that? He was within a few $1,000 of where it needed to be, rather than if it would have come in at 85, you would have been as impressed by the prediction, because honestly, 85 would have been an amazing call when he called 84. From my standpoint, I would have still patted him on the back and said, "That's commendable, Josh. You got us within $1,000."
Yeah. So I don't think it was luck. I think
Any of
that
it. You don't think any portion of it was luck? Just to be clear.
I don't think it was any of it was luck. I think what happened was, once he put that price out there, I think the fact that somehow, I don't think there's a player, it's some hive mind that says, hey, this price is there, it'll gravitate to it because of a CME gap or whatever constructs that we think the way the world works to make us feel comfortable with how something happens. We're like, well, it must be because of the CME gap. It must be because of this. It must be because of that. It must become, if you ask somebody to predict the price of Bitcoin in the future, if you ask 10 really smart people that have been in space for a while, they may use 10 different metrics. If they use power law, they may use 5 different R squareds to say, or R regressions about where it's going to go to. And then you have an argument over which one do you use. So I think that people have a comfort zone to how that happened. You know what? I don't know how Josh made his prediction, what he put into his head to model it. But I've been on spaces with him, and look, I could do math about on a space with first and second order Greeks. He's just so much faster than everybody else. It's like, I don't think he even needs to think. His mental model just happens. And I think that price ended up being gravitating. I don't know why it hit the price. Then he kept on doubling down on the exact time zone, which is absurd. And logically, if you would have told me to make a bet on Josh being right, if it was 1,000 to 1 odds, yeah, I would have bet $1,000 on it. Do I think it would have came through?
Okay. Yeah.
I don't know.
So let me ask you a question.
But
Does your thinking on this, we're recording right here now, and recording at the end of March. Does your thinking on this, or will your thinking on this change at all if Josh's prediction of, I think, 444K by November, I think I've seen him tweet that out before, if that does not come to fruition, will your thinking on the past events change?
Just to clarify, I don't think it's by November. I think it's been sort of more 2026 market top.
I have a tweet from him that says
But-
November. I'll post it in
But I think the question
directly
stands
from
irrelevantly. Green.
That sounded like an objection there from a non-lawyer, but I'll take that. Could something change my mind? Yes, I have to adapt I think one of my advantages in life being able to be able to trade and invest was that the market that we're in 2017 is not the same as now. 2021 is not the same. And this market is not the same as where it was in Q4 or anytime last year. We're 1 year after spot Bitcoin ETF. I think that information that we're seeing, anybody believing the old stuff is not taking the new stuff. And I mean new stuff, things that happen today, right? And where we could be in 1 week from now is that if you're thinking this is the way it went, what I know to be true, it's not true today. My advantage is that I could logically, if I think that the input parameters change on a daily basis, then logically I have to change my trading strategy, even though I'm not comfortable with what I have to do. And for me to change that in my comfort zone, that's something that's relatively easy, very easy for me to do. I don't even think about it. And Josh can do that just intrinsically. So I don't want to, Josh is 100x better at doing that than I am. But for me, when I talk to my friends that have been very successful, they're like, how do you do it? And I'm like, I just can't. And my friends that for 15 years have watched me invest and do it. So your question to me, Joe, is very clear. Will something change my mind in the future about this? Whether or not some future price prediction he makes again about Josh? No, in the end, I don't think that I don't think it serves him right to get this to make another prediction besides a 444. But in my view, what I think will not change uh, um, about I don't think my view on what this prediction happened, 84K, I don't think that will change. Could I change it? It's possible. But I think my belief about Josh, again, is the exceptional person category.
Yeah, I agree with Green. I don't think it would change it, but I think it could enhance it. I think we'll definitely all be looking for it. I thought something that hasn't come up here that I thought was very interesting was, I think Level 39 noted this on Twitter, how much numerology is baked into the numbers Josh has been using or sort of speaking to or predicting. A lot of 369, specifically around Pi Day of 21 million Bitcoin. He predicted Pi Day, which is March 14th, 314, that's 42, and he predicted 84K on 314. And then he said, 360 plus 84 brings us to 444. And 444 has a lot of sort of numerology behind it. And it's a very protective number. There's a lot of security in 444. So who knows if the world is sort of operating on fractals. Something else he brought up was sort of how this signifies the fourth turning, which was in.
to focus on Bitcoin. And then frankly, I have a November 2025 target 10% higher, which would be $440,000 than 400K. I've seen it make.
That's a great one to share. I really appreciate that.
Okay, so I want to chime in on numerology here for a second.
Hey, Bitcoiners, I'm heading to Bitcoin 2025 in Las Vegas from May 27th to May 29th, and you need to be there. This isn't just another conference, it's the ultimate Bitcoin party. Grab your ticket now using promo code MATRIX or at the link in the description. See you in Vegas, freaks. Let's make this one legendary.
Okay, so I want to chime in on numerology here for a second. One of the so my test scores in math are not particularly high, and I know lots of people just because I'm in Silicon Valley that score 800 on the math SAT, and so I have had the pleasure of meeting I would consider PhD in math, like they have a PhD in math, and they're that smart in math, true mathematicians. I'm not even on the academic level. I'm not even close, right? So, and I failed college calculus. Okay. With that said, I've talked to these mathematicians and I've argued mathematical points with them. So when somebody mentioned numerology, I do not like irrational numbers. I hate irrational numbers. I like them that it always ends. I don't like anything right at the decimal point. I like multiplication tables that I can do very fast in my head. I'm able to calculate percentages very quickly. I can calculate multiples very quickly. And I've honed this over the years. So if I go talk to somebody that's a mathematician, because I've honed that skill over the time, the skeptics around me will be like, wow, he's just using numerology, a double, double, double. I'm like 2 to the third power. And I'm like, for me, I can just rattle that off. It's just because it's built in my head. But if you were to standardize test me, I wouldn't get high scores. I think Josh would get very high scores in standardized testing. So I think what happens is to the casual observer is that people that are exceptional in math, it looks like numerology because it sounds like gibberish. It's like, really? You're going with 2 to the third? Sorry, I mean, you just got to think about that. So I think you need to just think about these things. And if it makes you feel more comfortable to think that it was numerology, okay. And if you're directionally right, doesn't matter. So again, Josh's method, I don't know. Do I think he used numerology? No. I just think he could do it. It's just one of those things. It's like all these, they don't know how. And I'm comfortable with not knowing. I think the people that are listening right now, we have 533 people in the space.
Can you
Are you
explain that?
comfortable with not knowing how he did it?
Grant,
Go
you're
ahead.
a bright guy. Anybody who hears you, he knows you're a bright guy and you're very successful. Typical, don't trust verify type crowd in Bitcoin. How we should just stick your head and sand, not question, not be. I mean, like you said, your handle grain of salt. How are you able to just say I'm comfortable not knowing how he did it?
Uh, well, that's a very easy. I just am. I don't know. I was born that way. I'm just comfortable with. I'm comfortable with not knowing how somebody smarter than me could do something. I am. I don't know how I do that. I take very large positions with large sums of money, and I could be comfortable with it. It's just the way I am. Josh is different because he's able to calculate things even faster than me. And so from that perspective, I'm like, so I think that again, we go back to the exceptional people, Olympic athletes, Michael Jordan and so forth. And believe me, I'm not on that category, but I think for those people they were genetically born with some gift and they were just there. And so I don't, if that makes people uncomfortable on this call, then I'm comfortable with not knowing how something happens. Maybe that's the insight for the call. I don't know, but to me, I'm able to sleep at night not knowing.
Yeah, I mean, it was just astonishing to watch. I think that I too lean towards I'm comfortable not knowing how he did it. I just stand in amazement. And it happened regardless. And it was a shared experience, I think, for those of us that went through it. It was like I found myself rooting for Bitcoin price to go down, even though it's not in my best interest. I've enjoyed this conversation. Matrix podcast. We put out a philosophical conversation every Sunday with some of the best thinkers in the space and outside the space, talk about things through a Bitcoin lens. I'll turn it over to Joe for any final questions for either guest, and then I'll give each guest maybe a minute or two to just wrap up.
Yeah, I mean, to me, I guess the question I want to say is that I like data points, right? And I've seen fantastic things in my career, in life, things that seem like more than mere coincidences. Some might even say on the verge of miracles, right? But the thing I always have to remind myself about, and is that there's a lot of luck in life. There's a lot of things that just happen, and sometimes there's combinations of extraordinarily talented people that have exceptional abilities that also fall into extremely fortunate circumstance. And that's when really magic can happen in a lot of ways. So my view, and this is just shows you my view of hearing all this, is I think Josh is an extraordinarily talented, gifted person. And it's amazing for him to do some of the forecasts. I've heard him go on, like you said, going through the Greeks and doing these things in real time. It's incredible. That being said, I know that there's a lot of exceptional people in life, and they will tell you that there's combinations of luck that always play a role. So I guess the way I would leave it here is that in Grain, you've already answered this, but if you want to comment further, you can. But really, I wanted Kevin to give an example of this, like to what, if you had to put a ratio on it, for Josh's ability to forecast this, what percentage of the makeup would you attribute to just good fortune, and what would you be able to attribute to, his skill and his unique attributes in assessing the market? And we'll start with Kevin.
Yeah, as I said the last time I spoke, I attribute a lot to his background and skill and his brain. I'm challenging everybody else who doesn't understand survivorship bias to first look at that before you, because until we've seen Josh's model, we don't really know how he did it. So everybody else just needs to take a step back. For instance, I don't know how to post in the Nest, so I just started sharing my articles, like in the comments section. And so the three things I want to share are my put call parity options physics 101, free for everybody. My video Bitcoin for family offices to show how I went from NVIDIA AI to understanding Bitcoin thanks to Sailor. And then number 3, my October 27th predictions. Take a look at this. Like, nobody, if I told you on October 27th about my strong conviction and my positions that Bitcoin was about to break out and go very quickly to 85,000 and then to 100,000 within a month, if you had believed my conviction and followed me even a little bit, I mean, how much money would you have made? But nobody talks about my prediction because I don't have a Twitter following. So so this is an example of a prediction that worked in a very short time to make some money. Now, so back to Josh, until I see his model, I'm going to assume the same thing as Grain, that there are exceptional things going on, just like the way Isaac Newton, discovered the calculus and planetary motions, and Kepler. Kepler was driven by religion largely because his passion for God and his belief in God drove him, but he discovered amazing things with his laws, and then Galileo. So there are exceptional people among us who have insight that we'll never have. And so I hopefully one day we'll see Josh's model of how he did this. And until then, I think it is very remarkable. I just wanted to come on to educate people about survivorship bias and being fooled by randomness.
Thank you, Kevin. I hope everyone's enjoying this conversation. I hope if Josh is listening or tunes in at some point, Josh Mandell, aka Josh Stradamus, I hope he finds this call of us doing service to this sort of prophecy and prediction rather than a disservice. I'll turn it over to Grain for any final thoughts before we either wrap it up or go to
Yeah. So my final thoughts on this. I'm going to answer Joe's question directly. He said, make a proportional, assuming out of 100%, what amount was skill versus luck? Is that correct, Joe? That was your question in terms of
exactly.
Yeah. So what I found out recently, I'm a terrible. If you ever want to lose money, follow my bets at the sports book in Vegas. No, even with the line, I will probably get everything wrong. So I am the most horrible sports bettor ever. Although I'm quite entertaining in Las Vegas with my friends, but they know just the opposite of all my bets. So anyway, what I found out was the best sports bettors right 56% of the time. They can make a living at it, and maybe if somebody does exceptional, maybe it'll be a point or two higher than that over the course of a season or a year or so forth. So to answer your question, Joe, I think based upon my calculations, he's a solid 80-20. 80% skill, 20% luck. I will attribute 20% of this of luck, hive mind, willing it to be beliefs you have. That's the remaining 20%. But I think that Josh is just so far beyond on that. And one of the things that I've had to do, and Joe, you said this on a call, it changed the way that my online persona is I rat things that are comfortable with me or I don't even think about is not appropriate for me to necessarily say when I make option plays in space. So I've had to be very careful about that with copy traders. So that changed my persona over time because something that was very easy for me is dangerous for other people that don't understand the risks involved. So Joe, with that, I thank you for being the voice of reason on many spaces that I've been with on you and listening to you. I appreciate you asking tough questions. And I think that people need to change. And my last point is that I don't need to see Josh's model. I'm completely comfortable with that. If he said, I'll tell you what it was, I'd be like, no, I'm good.
Okay, that's great. I just want to emphasize before we break real quick, Cedric, for a second. What you just said there, Green, at the end there, that's so important because so many people want to have someone else do the work for them. And I know people that have taken on big positions since Josh made the initial call, betting on 400,000. That's why I knew about this tweet in the nest. People have told me they bought call options off this damn thing. And what Josh will tell you, as he tells everybody, is that it's not enough to just say do your own research. You do not follow him into these trades. What he's doing, he'll tell you. I mean, he's told me but do not do some of these trades because it's him. He's confident in it. He has the work. He has behind it, and you shouldn't have to be held responsible whether it's Grain or Josh or anybody else for someone else's piggybacking off your trading. So don't take this space. I hope people aren't taking the space as some sort of mandate on whether they should follow Josh Mandell in the next trade.
Right, and I do want to make a point about that. When I talked to Kevin, I did talk to Kevin last week. Kevin on the call. And I have talked to Josh before. People ask me, do I understand what Josh's trades are, his videos? I'm like, yeah, I understand times to make sure I get all of his points. And then people are like, you're going to copy trade him? I'm like, no. And they're like, why not? You could do it. I'm like, because I don't have the conviction that he has for his trades. Whatever method that he uses, I'm not privy to that. I don't know what they are. And even if he told me, would that change my conviction high enough to copy trade him? No. So I, Joe, I think that what you're saying is, and people take away about this, is that sometimes you just look at it and you're like, wow, that's awesome. And I do that. I watch Josh's videos and I just say, wow, that is awesome. I'm so happy I get to see it, and I'm not going to do what he does, even though I could match him. I mean, in terms for dollar to dollar, but I would never do his trades that he does. Specifically, he could trade up market, down market, and sideways market. And I tend to just be an up market guy. So I know my limitations, and Josh's limitations are way different.
Yeah, I appreciate those wise words. And, it's fascinating to watch Josh do what he do, but you can watch Michael Jordan dunk. It doesn't mean that you can dunk or that Michael Jordan could any way explain it to you how he does it. Joe, I'll leave it to you for any parting words. I think you should answer your
No.
question. Maybe, how much do you attribute this to luck versus experience in the markets?
Yeah.
And then we'll roll out on that.
Actually, I was kind of surprised because I heard Grain say 20, and I would have the exact same ratio. And I must have misunderstood because earlier I thought he was saying it was zero luck. But I think it's exactly, I think 80-20 makes a ton of sense. So it's the overwhelming majority is Josh's great ability to forecast the market. But like anything else, like there were macro and economic events that helped tip the scale slightly in the favor of what his probability models or whatever model he's using showed. So that's my ratio.
So real quick point about that, Joe. You forced me, and I've done this with other people before. What is the probabilistic outcome of a particular event? So what I would suggest to people is that anything in life, type it into Grok or ChatGPT and ask it make sure you ask the question, try and deceive ChatGPT. I try and do that, or Grok, and say, what's the probabilistic outcome that this will be successful? And it will give you a number. And so I've been doing a lot of talking to AI about this. So because you forced me to say from 0 to 100% to give a probabilistic outcome of what was contributed between skill and luck, you could ask that question to AI. And when you forced me to answer that question, I do have to contribute about 80-20. And that's your typical Pareto distribution. So I think that the fact that we're aligned on this, I don't know, I'm pretty happy about that. So I'll leave it there.
Yeah, and I hope we get to reconvene in November. That kind of lines up with Dr. Jeff Ross's call for 475, I think, in December of this year. So, a lot of congruity there. So maybe we'll all be getting together at 444.
Should I make a prediction on that?
Sure, let's do it.
I would, if for some reason the price goes to 400 or 450,000, I would go full gamma and only buy $300,000 strikes because I needed to exceed the 300,000 to maximize the position. So if I think that something's going to go to 450, let's say 500,000, I would buy 30% under it. Because if it does hit 500, like the prediction, I would want to buy the 350,000 call options on it at that price as an option trader. Josh calculated that way faster than I could even speak it. He would be like, oh, he would already have different numbers in his head. But if I know it's going there, given what I learned from fourth quarter and what I learned today, is I would definitely buy it at 30% under, right? Because I want to be 30% over when it hits that number. So mathematically, I could do that. And that's what I learned over time. But Josh is way faster if he's listening. So I would, again, if he did something, I wouldn't copy trade him. But I know what I would do. And I already told you.
Get one in.
Go ahead.
Let's do it. All right, David R. Did I get him up here okay? Yep. All right, go for it.
Hi, Dave here. So I kind of feel like a little micro expert here in watching this very closely through this whole thing unfolding. And let me just preface by saying I'm a complete Bayesian. I completely believe the Bayesian trader. I'm with you 100%. I'm going to look you up. Thanks for coming on. But this was just remarkable to watch, and I enjoyed Josh.
Hey, thanks. I just want to say this was a fantastic discussion. So, Grain, Cedric, Joe, so glad we could put this together, and everybody who stayed on board. Grain, did you say there were like 500 people on here? That's amazing. That's fantastic.
Yeah, I think it's awesome. I want to thank everybody. Also, Cedric, thank you for putting this together. Joe putting this together, and Kevin, I really appreciate discussing this. As I'm looking at right now, there's 400. It's dropping off 486, but I think it peaked a little bit over 500. And I definitely want people that are skeptical about what I say, and people should fact check me and come to their own conclusions. So thank you guys. I'm going to drop off. I'd be happy to do this again. If something else, and any other topic that comes, well, really, obviously the Bitcoin, everything you've done. Thank you, folks.
Yes. Thank you, everybody. Grain, Joe, Kevin, this has been awesome. It's been so dope. I hope you guys tune into the Bitcoin Matrix. I'm Cedric Youngelman. We'll definitely do this again, and we'll probably roll this back in November when Josh hits his next target. Thanks for tuning in to this episode of the Bitcoin Matrix. If you enjoyed the conversation, don't forget to like, subscribe, and drop a comment below with any questions or thoughts you may have. We'd love to hear from you. You can support the show by checking out our sponsors and affiliate links in the description. It helps keep bringing you great content while connecting you with awesome products that I believe in. Share this episodes with your friends, family, or anyone curious about Bitcoin. And let's keep growing this community together. Stay curious, keep stacking, and I'll catch you in the next one.